Most people spend their entire lives working for money, and never once stop to ask why the money never seems to be enough. They get the raise, the expenses rise, they get the promotion, the lifestyle follows. They save a little. Something unexpected takes it. Most of them are doing something wrong. Not because they're careless, not because they're bad with numbers, but because nobody, and I mean nobody, sat them down and told them how money actually works. I'm Dave. I spent 30 years inside the world of finance, Wall Street, corporate banking, and financial analysis. I've sat across the table from millionaires and watched them make decisions that broke them. I've watched everyday people with ordinary incomes build extraordinary financial lives. The difference between them? It's not income. It's not luck. It's not timing. It's what they knew. Today I'm sharing 7 things I learned in 30 years that most people never find out until it's too late. Let's get into it. Truth number 1. Your biggest financial enemy has your face. The year is 2008. Markets are collapsing. Red numbers everywhere. You open your account. You're down 40%. What do? Most people sold, not because the businesses they owned stopped working, not because the fundamentals changed. They sold because the feeling became unbearable. The market didn't beat those people. Their own emotions did. I've watched brilliant people with MBAs, make catastrophic decisions because they let fear drive. And I've watched people with modest incomes and no finance degree build real wealth simply because they learned to sit still when everything inside them was screaming to move. Your financial future isn't decided on Wall Street. It's decided in the quiet moments when the market drops and you have to choose. Do I trust the plan, or do I trust the panic? The most dangerous person in your financial life is the one who panics. Make sure that person isn't you. Truth number 2. Saving money will not make you wealthy. I know. That sounds wrong. Everything you've been told says save more, spend less. Saving is important. I'm not going to tell you otherwise. But here's what they don't tell you. Saving protects your money. Investing grows your money. Those are 2 completely different jobs. $10,000 in a savings account at 1% interest. After 20 years, you have about $12,200. That same $10,000 invested in the market, historically averaging around 10% annually, after 20 years, you have roughly $67,000. Same money, same 20 years. Completely different outcome. The wealth gap in this country isn't just between high earners and low earners. It's between people who save and people who invest. Most people spend their whole lives in the first group wondering why the second group keeps pulling ahead. Truth number 3. The boring strategy almost always wins. 30 years in finance taught me something Wall Street doesn't exactly advertise. The boring strategy wins. Not the exciting one. Not the hot tip. Not the cryptocurrency everyone's talking about at dinner. The boring, consistent, unglamorous strategy you set up, contribute to every month, and leave alone for decades. That one wins. Here's the math that changes everything. If you lose 50% of your money, you don't need 50% to recover. You need 100%. This is why avoiding big losses matters more than chasing big gains. Think of it like a road trip. You don't arrive faster by flooring the gas the entire way. You arrive by not crashing. One accident ends the trip, no matter how fast you were going before. Boring is underrated, and we're going to prove it with real numbers in the videos coming on this channel. Truth number 4. Time is the one asset money cannot buy back. This is the one I wish someone had told me at 25. A 22-year-old who invests $5,000 a year for just 8 years and then stops completely will have more money at 65 than a 30-year-old who invests $5,000 every single year without stopping. The person who invested for only 8 years ends up ahead. The only difference? They started earlier. Warren Buffett has more than 90% of his wealth accumulated after age 60. Not because he found better investments at 60, because he started compounding at 10 years old and never stopped. If you're watching this in your 20s, this is your moment. If you're in your 30s or 40s, the machine is still open. But every day you wait is a day compounding isn't working for you. I've never met anyone who started investing and wished they had waited longer. Not once in 30 years. Truth number 5. Most financial advice is designed to make someone else rich. I'm going to say something my industry won't like. A lot of financial advice out there isn't designed to build your wealth. It's designed to generate fees and commissions for the people giving it. Here's what that looks like in real numbers. Two people invest $10,000 for 40 years. Same 8% return before fees. Person A pays 2% in annual fees. Person B pays 0.05%. The difference at the end? Over $230,000. Same money, same market, same time. The only difference? What someone else took off the top. Not every financial advisor is bad. A good advisor is like a great coach. They're on your team. But before you hand your savings to anyone, ask one simple question. How do you get paid? If that question makes them uncomfortable, that's your answer. Truth number 6. What you own matters less than what you understand. In 30 years, I've seen people make money in real estate, stocks, bonds, businesses, almost every kind of investment you can name. And I've seen people lose money in those exact same investments. The investment wasn't the difference. The difference was understanding. The people who made money knew what they owned. They knew how it worked, why it would grow, and what could go wrong. The people who lost money heard something was working for someone else and jumped in. Here's a rule that saved me more times than I can count. If you can't explain in plain English why you're putting your money somewhere, don't put your money there. Simple ideas, held for a long time, beat clever ideas held for a short time. Every single time. Truth number 7. It's not about how much you make. It's about what you keep. I've known people earning $200,000 a year who had nothing. And I've known people earning $52,000 a year with 18 months of expenses saved and a growing investment portfolio. The difference wasn't income. It was what I call the gap. The distance between what you earn and what you spend. Wealth isn't built from income. Wealth is built from the gap. Here's what happens to most people. Income goes up. Lifestyle follows immediately. Nicer apartment, newer car, more subscriptions, and the gap stays exactly the same, or gets smaller. The people who build real wealth do one thing differently. When their income rises, they let the gap rise with it, not the lifestyle. That gap goes straight into the machine, investing, compounding, building, until one day the machine is working harder for them than they ever worked for anyone else. That's the goal, not the car, not the watch, not the house that impresses people. The freedom to wake up one morning and realize your money is working harder than you are. That's what we're building here. 7 truths. 30 years in the making. Your emotions are your biggest financial risk. Saving alone will not make you wealthy. The boring strategy almost always wins. Time is the one thing money cannot replace. Most financial advice serves someone else first. Understanding beats everything, and wealth lives in the gap. I didn't read these in a book. I watched them play out across 30 years, across thousands of decisions, across people who built something real, and people who wondered why they never did. That's exactly why I started this channel. Because this knowledge shouldn't live behind closed doors on Wall Street. It should be here, available to everyone, in plain English, from someone who has actually lived it. Every week we're going deep. Stocks, real estate, index funds, debt, building wealth in your 30s, protecting it in your 50s. Real numbers, no jargon. If this video gave you something today, hit subscribe, because what's coming next is going to be worth showing up for. Drop a comment below. Which of these 7 truths hit you hardest? I'm Dave, and this is Finance with Dave. Let's talk money, the real way.